Hello again, it's time to turn our attention to the FX markets here on Dukascopy TV. I've been speaking with Miles Eakers from Savi Trading. There's some interesting stories in the FX market at the moment. The ongoing weakness of the yen, sterling weakness as well, and also the euro's holding its own. What profit opportunities are you eyeing at the moment?
We've been long, like a lot of the yen crosses, mainly the euro yen, on this move up to the 120, just going into the Bank of Japan meeting the other evening. And obviously they did slightly disappoint, saying they're going to wait till 2014 before they're going to do unlimited bond buying. But I think they may be starting to open a can of worms there in terms of, I think you could start seeing some inflationary pressure in the form of weak yen. And as a result, it could be a self-fulfilling where people start to cover themselves by buying short-term government bonds, and you could see a spiralling effect. And I think the Bank of Japan are aware of that. We do think it's a bit overbought, as we've said for a while, but again, any bullish signals in the market, we are looking to enter into long positions, and we've done quite well out of that. We're looking at this 117 area. I think there's a level just below this. If it breaks through there, then I think we'll be taking a stand back and waiting for better entries down near the 115, in particular on dollar yen around the 85 area.
Yeah, I know you spotted the yen move quite early, but is it too late to capitalise on those moves?
I'm not sure. I think if you start to see expectations of inflation in Japan, improved US growth, and I think all of a sudden you could start seeing 95, maybe 100, even 110 on dollar yen. And that puts some of the the yen crosses like euro yen 128, 130, sterling yen maybe 150, 155, which at the moment seems a long way off. But in terms of risk reward, I'd look to buy on dips. But again, the upside is very far in the north area.
Do you have any timeline on that? Because since that meeting, we've seen dollar yen move below 90, considering it's about the 88 level.
Yeah, definitely. I think you always have corrections in the FX market. Nothing goes up in one direction, and I think it's important to be aware of that. I think this is the sharpest correction in the yen in recent times, maybe the second. And as a result, I think obviously when it does have that sort of correction, you have to look back into history and see how long it lasted for. So I wouldn't say we're going to see dollar yen at 111 next week, but definitely it's something to be aware of. And I think for as long as the monetary policies are being implemented by the central banks, you could see dollar yen push higher over the coming months.
Yeah, and last time we spoke, you were looking at the CAD and the Aussie. Do you still see opportunities there?
Yeah, definitely. There was some inflation data out of Australia which came out weaker than expected, which gives rise to maybe potential further downside pressure on the RBA. So obviously Aussie weakness, but Aussie seems to be holding strong, and I think the more we hear slowdown in China, the more we hear about Aussie rate cuts, you'd think more of that would be priced in. So I am a bit sceptical about Aussie. I prefer long euro CAD, and that's done very well since we're buying on dips around the 125, 126. It's now around the 131, 132 area. So I think it's important to be aware of the catalyst for monetary policy.
What about the sterling? Seen a lot of weakness since the new year. Is it just going to carry on going down and down? Also, we have David Cameron saying that he's going to have a referendum on the EU as well. Yeah,
that's not going to be until the next election,
though.
2015. So it's a nice little bit of chess by them. If you want to have a referendum, vote Tories. I think a lot of the sterling weakness recently has been on the back of that. If you look at euro dollar, Aussie dollar, especially euro sterling and sterling Aussie, I think sterling Aussie hit the 149.60 area, 150, which is obviously psychological. Euro sterling's been very well bid as well, and I think maybe this has been on the back of the referendum, and now we've had this news out, the uncertainty's gone. I think long sterling crosses, particularly against the dollar, are not a bad shout for the coming weeks.
Generally speaking, sentiment in the FX market is quite strong at the moment. Do you expect that to continue?
To an extent, I think the yen pairs have been the ones that have really done the big moves on the upside. Euro dollar's still stuck in its fairly tight range. We seem to be consolidating at the moment. We are eyeing a potential another break on the upside to get another leg higher. If we look at the S&P, we're approaching the 1500 psychological level. If we break through there with conviction, then obviously it can continue to push higher. But a lot of people are getting very bullish. The S&P doesn't seem to be dipping very aggressively. It's just being strongly well bid, and we're of the view that when the market gets over itself and over bullish, then corrections can be quite aggressive. And so we are obviously bullish in the market because it's going up, but we are tight stops and waiting for a correction to really add into some longer term positions later on.
Well, Miles Eakers from Savi Trading, excellent as always. On Friday, I'll have interviews with Gecko Global Markets and Nutmeg. But for now, goodbye.